Okay, as I was saying, and let's kind of get started here. I'm going to spend a few minutes. I've kind of had a chance. You guys were to have submitted your financial documents by last night, and I've glanced at everybody's, and there's some work that needs to be done. And so, for those of you that are in class, I hope to come around today, and those of you that need it, there's a few that were pretty good and don't really need any work, but for those of you that need some work, I hope to come around and give you a little bit of guidance. Okay, one of the things that I was telling these guys up here a little bit earlier, that I think may have been a bit of a problem. This is a lot more condensed time frame than what we work on in business finance, and in business finance I make you submit everything one at a time and kind of look at it before we move on. Here it all kind of came at you, and I think you guys kind of worked on it that way instead of doing it one at a time. It kind of looks like you tried to just work on this one a little, jump over here, jump back and forth. I'm guessing. I'm not sure that that's correct, but we didn't get, even the startups weren't correct, and then what happens in a lot of cases when the startups aren't correct, everything else gets fouled up. And so sometimes it's better. We're just going to go back to the beginning. I'm going to come around. I may just help you with just that one or two documents and make sure those are okay, and have you submit those so I can look at them. If you get them done in class, that's great, and then we can move on. And then we'll take a look at the next one, whether that's the income statement. The income statements for most people looked okay. Cash flows, not so much, right? I'm going to look at just a couple things today, right now, that were kind of common. A few things that I saw several groups make errors on. So I just want to cover those, and that way if I'm coming around helping somebody else, you can maybe go back and work on that part of your own. And so let's take a look at that. Let's just start with the startup. Okay, first, and I even went back and looked at my video, and I didn't hit this hard like I should have, so I'm taking the blame here. Sources and uses have to match. Okay? Sources and uses have to match. If you need $100,000 to start your business, then your sources must be $100,000. Okay? If you need $80,000 to start your business, then your sources should not be $100,000. You don't need $100,000. You need $80,000 to start your business. Okay? If you want an extra $20,000 in working capital, then add an extra $20,000 to working capital and get your $100,000. That's fine, okay? But sources have to equal uses. That's the primary focus on this, okay? The second thing that we focus on is that we do all of our expenses or investments first, okay? So you add those up. If that equals $100,000, guess what? I need $100,000 in sources. Okay, so if my uses or my expenses, again, I don't like the term expenses because you're making investments more than expenses here. But if I get a total of whatever it is, $40,000, $80,000, whatever my total of expenses or uses is, that's what my sources has to be. Okay? And if you want, the sources then becomes pretty easy. Okay, if my expenses are $50,000, then I'm going to borrow $40,000 maybe, and I'm going to invest $10,000 myself. That's $50,000. It matches. Okay, this part shouldn't be difficult at all. Okay, it should not be difficult at all. So just make sure they do the expenses first, then make sure that your sources in whatever combination. Okay, I might, if you come out and you say, well, I'm only going to borrow $5,000, I'm going to contribute $45,000, I might tell you, that seems a little unrealistic, and so we'll rebalance it. Not a big deal at that point in time, but make sure that it's balanced, okay, that they equal. Next question then that I want to go over is combining worksheets, and a few people just didn't get their worksheets combined, and you know how I've been really pounding at it. I want you to link cells. You can't do that effectively unless you've got your worksheets combined. So make sure that your worksheets are combined. You do that simply by, I've opened up the opening day balance sheet. Make sure I click my enable editing. I think I need to go back and do that also for my startup. Oops, it is enabled, okay. So I right click down here on the tab that says opening day balance sheet. I click on move or copy. I add it to my one that says startup expenses in this case. Hopefully you'll create a whole new workbook that has your business name on it. That's what I would you know, when you get them combined, just save it then as XYZ Company or Acme, you know, Acme Rentals or whatever it is. I'm going to move it to the end. It doesn't matter, you know. I just do that because I kind of do these in order when I do it, and so it makes sense. But if you don't, then you can always move them around after you get them combined. That's really easy to do. Okay, so now I've got two tabs down here. I've got my startup, I've got my opening day balance sheet. The next most common mistake that I saw for whatever reason, okay, cash in bank on the opening day balance sheet is equal to your working capital. A whole bunch of people linked this to their investment. Okay, your investment is what you're putting into the business, but some of your investment is going to go to purchase some of the stuff you need, right? Some of the equipment, the inventory, the whatever. And so your investment has absolutely no real bearing on what your cash in the bank is when you start. Okay, so this needs to be linked to your working capital. And speaking of working capital, a couple folks still had reserve for contingencies, which I've said I don't really like. I mean, it's basically the same thing as working capital, so please just put it in working capital, okay, as opposed to reserve for contingencies. Okay, that was kind of that was the biggest mistake that I saw on the opening day balance sheet. So it wasn't a huge deal, other than that caused people's balance sheets to not be balanced like they should, or at first glance I could tell because total assets were far more than like total sources on your startup, which immediately tells me that something's wrong, right? Okay, so make sure we link that correctly. Let's see what else I had on there. One or two people had the loan amortization or the CPLTD wrong, but I'll just address that with those folks kind of individually. The other thing then I just wanted to look at for now is the cash flow. Because what I didn't get, and I want to say one thing too, this formula, there's a formula down here that might be incorrect, which might be giving us a bad number. And so I'll come around and look at that individually too. Okay. And how that got in there, I have no idea. But we'll take a look at it. I'll try to fix it for the future, but for you guys, we just need to fix it for now. So I'll come around and look at that individually. And I might have to send out a separate video to the few distance students just to let them know what that is. But your pre-startup here needs to look exactly like your startup expenses. Okay. And what do I mean by that? Well, you don't have any cash sales pre-startup because you haven't started yet. Okay. Collections from credit sales, you don't have any of that because you haven't done that yet. In this case, and this is the other cash flow that you might have used, combines equity and loans. Okay, and if you're using that one, then all you have to do is link it. By the way, I gotta move this and get it combined here. Okay, all you have to do is link that total to your total from your startup, which is your startup sources in that case. Your total, I'm sorry, I'm going to come down to the summary. It would be that one. This particular cash flow breaks it down. It's got equity and then it's got loans. So it just breaks it down between the two. So you can just click equals here, go to your startup. Still, you've got it down here in the summary, owners and other investments, that's your equity. So you'd link it right to that with an equal sign and then a deal. Okay, loans received, then same thing, you're going to link that right to your bank loans. You might have to add, if you've got other loans, you might have to hit the plus sign and then add the other one. Okay. So that would give me my total sources. Basically, your total receipts here. Make sure everybody look at when you're looking at your cash flow, make sure that your total receipts in the pre-startup column is equal to your total sources from your startup. Okay. Then you've got payments. And from there to the next orange one down here, right, is all your payments that you're showing on your startup except for your working capital. So if I go back to my startup, right? I've got all my expenses. I might be able to use just the summary down here, okay? You may break some of those down because, I'll give you an example. Let's say your location and admin expenses. You might have a rental deposit and utility deposit. Okay, those might actually go into a prepaid expense or something up here. Okay, so you might not be able to use the summary, but if you get the totals correct, okay, you'll know, because if you get everything correct right here, then your opening cash balance, write this down, your opening cash balance should equal your working capital from your startup and I should say, it will also equal your cash balance, your opening day cash balance, right? Your cash balance on your opening day balance sheet.
Is that cash in bank?
Cash in bank, thank you. That's the word I was looking for right there. Thank you.
And your working capital?
Yep, and because your working capital is the same as your cash in bank, right?
Yeah.
Yep, so all those, now we got three things that are all going to equal that same amount. Don't plug that in. Make it, make sure you enter all the numbers in up here correctly, and then that should be the number. That's kind of your check, so you know that you've done the pre-startup correctly. Okay? Question?
The problem we were having was capital purchases.
Capital purchases, okay. Capital purchases, because if you look up here, it doesn't say machinery, equipment, and real estate and all those things, okay? Those things are generally consolidated into something that we would call capital purchases, okay? Capital purchases are usually those items. Any type of an item like equipment, machinery, real estate, buildings, maybe even leasehold improvements. I don't know if there's a leasehold improvements up here, okay? Normally all those things are called capital purchases, capital improvements, okay? Feel free to add lines. If you want this to be a little bit more specific, feel free to add some lines and say, okay, I got a capital purchase real estate, capital purchase equipment, capital, and you can even be more specific, capital purchase van, capital purchase, equipment, capital purchase, kegs, whatever we got going on, okay? Feel free to do that. I'm not saying that you have to. If you combine them, that's fine too, because you'll tell me about it in your narrative probably. Okay. Any other questions? Those were the main things that I wanted to go over now. The rest of the cash flows and the income statements might have been okay. It's hard to tell because so many of these pre-startups were wrong, and so I just don't know if they were correct or not. Any other questions then? Okay. I'll quit then for now, and like I said, I'll spend time. I'll come around. I'm going to hit the people first that I think are pretty much ready to go. I'm just going to hit them real quickly. So say, have at it, get working on your marketing, and then I'll come around and spend some time with the rest of you otherwise. So
like the marketing outline that you put on D2L, like the link to that outline, is that what we're...
Probably, yeah. Yep.